And welcome to VSA Capital Tech and Transitional Energy Podcast. We are actually recording this on Thursday, the 11th of December, but it'll probably get published on Friday, the 12th of December, just because we're rather busy and we're running rather late. But I've got Phil sitting here right beside me, all eager with his notes and, ready to say all his pearls of wisdom if I actually let him. But so it'll be quite a short one, actually, because it's been a long day today. Having said that, there's always things to talk about. And of course, it's at this time of year, you always review, how did you do in 2025? Do we want to do that, Phil, or not? It's slightly embarrassing. Well, I'll tell you, look, in 2025, beginning of the year, I picked Invinity Energy Systems as my stock for the year. The trouble was it started the year at about, it started at quite a, should we say, a high price relative today. But I am actually up. I'm up 12.5% as we stand today. It's obviously come off a little bit of its peak. It's been up and down like a, I can't say that phrase, I think it's a bit rude. But anyway, somebody's draws. Yeah. And but at least I'm up 12.5%, but it hasn't been spectacular. I mean, the sector has been still quite tough in 2025. I still have hope. And actually, where I have hope, and I'll go straight into this. I just picked up, Phil. Well, actually, I said I just picked up. You just sent it to me.
Thank you very much.
I'll give it. I hate giving you credit, but credit where credit is due. There's a news release out of some Scottish newspaper. They're about Invinity about to hire 1,000 people in Bathgate. I mean, I think they've currently got about 150 people globally. There are 1,000 people in Bathgate. I mean, that must surely tell you they're about to announce unbelievable orders, or maybe that's a scoop. It's got Jonathan Marin's picture on the press release.
I think it's a potential, Andrew. Should they win the future?
It must mean they think they're getting all this business. But anyway, that was my 2025 stock. Phil,
I
have beaten you. I've beaten you.
You have beaten me. We have.
That's all that matters.
Thank you very much for that, Andrew. Right, so I had Lucico actually, and they shares have been up and down, but only unfortunately up by 2%. And this is the cabling, electrical infrastructure products, but they've got something like 70% of the businesses in the UK, and so it's a mix of professional markets, offices, commercial spaces, but also residential. And those, construction markets have been soft. Nonetheless, they've made a couple of acquisitions, but it's mainly been acquisitive growth rather than organic growth, and hence the shares have not been tracking too well. Nonetheless, they have recently had a trading update, and they're expecting full-year profitability to be towards the upper end of market expectations. So maybe a bit more patience is due on this one.
And so you're up, 2% for the year?
Oh, right? Thank you. Below inflation, yes. Actually,
you'd have been better off with your money in the bank. At least I've got a sort of premium bonds type return, I think. It's all tax-free if you've got the losses that I've got. Anyway, look, I actually really, I don't know if some of the listeners of this podcast, I think, do listen to our 5-Minute Morning Miner as well, which we do daily. Actually, in there, we had much better returns. In fact, the loser of all the three of us, he lost on a 208% return for the year.
Whoa.
I think I'm leading at 486%. So we're clearly much better at mining than we are at tech and trans. But, that's a little bit of that as the macro sector, not actually the stock picking.
I was going to say, I don't think any tech ones
and actually, we will do, obviously, our new stocks in the new year. You can't do them still we're still in 2025.
We are.
But I will just give you one little thought that I was mulling on my mind a lot, but both for tech and trans and for mining, actually. And I've been talking to people a lot about this, and so I'm airing it as a view, and we'll see your reaction.
Yeah.
But I see the move from NMC to LFP really accelerating at the moment. Now, for people that don't know, that's nickel manganese cobalt batteries into lithium iron phosphate.
Yes.
And actually, a lot of people said, LFP is fine, but it's not suitable for EV cars and things. But EV cars are now coming out with LFP.
They are, aren't they? Yes.
It's cheaper, it's easy, you don't have that terrible cobalt in it.
Yep.
There's plenty of iron around. Phosphate's quite interesting. Not so much phosphate around, so it could be an interesting mining pick as a commodity. But I think that if that really accelerates, that has all sorts of implications down the whole, obviously in mining, but also in the battery supply chain, people who are doing things like that. And so I think it's quite an interesting thing just to consider about in 2026 as you're sitting there basting your Christmas turkey on Christmas Day, think about LFP versus NMC. It's the sort of thing that I do.
And talk to your family about it
And,
as well.
My family would be fascinated. Well, one member of my family would be fascinated because he runs the Schroders Global Energy Transition Fund.
There we are.
And actually, funny enough, if you like this stock again, we've mentioned many a time, but the way I think to play LFP as well as through the mining space, of course, is Nano One Technologies on the TSX. Yep. And Dan Blondal is a very, very, very clever chappie. If you never listen to Dan speak, listen to Dan speak about batteries. I'd love to be able to do more with him over in the UK. He does come over here quite a lot, but he's been talking LFP since I've known him, and it's all starting to happen. So interesting. Anyway, that's sort of last year. Moving into next year, my only other, we've got to, I think, it's probably on your list of stocks to talk about, but can I talk about it?
Yes, I think you should.
Can you guess what it is?
I can actually, Andrew. I think you know a lot more about this than I do because I've only just been finding out, reading the RNS announcements this week.
So obviously, we've talked a lot about Origo on this podcast. We've done live podcasts with David Keane, the CEO, out of Dubai at the air show. We've done a lot of social media on it. The share price is actually performing unbelievably since we did the placement at 45p at the back end of August. Today, it's basically trading at 80p. So that's a nice return. But on Monday, they announced a whole host of things, actually. The main announcement was their new hub strategy to go global, where they did basically say they would do hubs in Southeast Asia. They sort of said Singapore, Malaysia, the Middle East, Dubai, maybe other places in the Middle East. USA, they actually said Cincinnati. Very good reason for that. They're already there. They've got people there. They're testing vehicles there. Cincinnati are very keen on their product. And, of course, Coventry, their main base for probably Europe. That was but the key to this whole hub strategy, and I've spent a lot of time talking to David Keane about this, and a lot of it comes from my relationship with ARM, is the whole license and royalty game, where by getting the funding locally by other people into the local businesses and then just basically having a license and royalty sort of thing, it's not quite as simple as that. You don't dilute shareholders at PLC. The PLC shareholders just get all the profits and returns. It's amazing. It needs a little bit of understanding. I'm fair to say that. So that was and by the way, you would not be able to say in the document, it's quite a long RNS, the sort of names and specifics that they're saying in there, if you were not quite well advanced on it, you wouldn't be allowed to. So it tells you we are very advanced. Sorry, they are very advanced. I don't work for the company quite yet. No. So 2026 is going to be an incredibly exciting year for them. And there was one other announcement, actually, which, I've got to just mention it, but we were appointed joint broker. And that actually was really, really exciting. But anyway, I think some people thought we were already, actually. So anyway, that was that one that came out this week on Monday. So clearly, it's one that does take up a lot of my interest. But I'm just so excited by it. Anyway, so elsewhere around the world, the only other thing, 2026, again, just these are just musings. We'll talk about more at the end.
Yeah.
You sort of feel the Ukraine war will stop next year.
I hope for all involved it does.
Well,
but
for all involved, but is Trump going to walk away? And then in which case, Europe's not going to defend it. Trump's made that pretty clear. He doesn't think it can. So, that will reset some of the balance. I'm also thinking into next year, we've really got to think about the growth of AI and the data centers and the implications that a lot of that goes into energy. So it's not for this podcast, it's for a mining podcast. But these are the sort of themes, again, when you're now carving the turkey rather than basting it. But just start talking about data centers to your family and, the energy they require and how we're going to solve it. They'll love you for it. Yeah, honest, they will. They'll probably actually say, pass another bloody glass of wine. Anyway, there we go.
Indeed. But it's going to be an interesting theme, that one, Andrea, because given the power requirements, the water requirements, let's see what happens to the planning of these things at a local level, these huge data centres, and the connections to the grid, all those issues that are faced by renewable infrastructure. And can they roll out as fast as these capital expenditure budgets are hoping that they do?
What I would say is, I think it's going to be a fascinating year next year, 2026. I think there's going to be a lot of changes, a lot of things going on. Actually, I think making a prediction for 12 months is going to be really tough. because I think people will want to possibly trade out of things halfway through the year and then into something different because it could change completely in the second half, bring on the substitutes. But we'll see. Right, on that note, though, Phil, you are, as usual, have got your little notes there. Did anybody else report trading updates? We actually had a few trading updates.
Yeah, we've had some bits.
Come on, let's whiz through the
We've
list.
had some bits of bobs. Right, battery technology, Ilika, IKA. This is solid-state batteries, looking at anodes, solid-state electrodes. They're developing batteries for automotive. We talked about lithium iron phosphate, but this is solid-state. So solid-state batteries, you know a bit more than I do about this, Andrew. I mean,
I've been down to Southampton and visited their facilities quite a few times. Look, it's fascinating technology.
So they've just announced that they've commenced shipping a 10 amp hour. I can't just say it. Prototypes. This is the Goliath battery. This is for automotive, and it's 5 times the capacity of their prior prototypes. I mean, the amp hours is very important because the amount of current you can deliver in 1 hour, and that obviously impacts the power of a vehicle. Really important in terms of its energy density. They also think the new cells will reduce battery pack weight by 20% and manufacturing costs per vehicle. This is information that comes from independent experts that that have had a look at this technology. So it's all more development progress for Ilika. Another company that we've looked at, talked about many times on this podcast, and keeps doing well is Journeo. The ticket is JNEO. The market cap is £82 million now. Shares are up 58% this year.
As they say, Phil, they're on a good journey, aren't they?
They are. No pun intended there, Andrew, but they are. So next time you're at a mainline station, look up at the signage. It may well be their signage that's at the stations, but it's all about information for transport users on the networks. But they made an acquisition, interestingly, of a company called Crime Fire Defence Systems, and it protects high-security infrastructure sites, probably military bases as well. Won't be surprised there. But they received purchase orders of £2.3 million, and this is for high security infrastructure protection solutions. So it's a new order for them from an acquisition that they made earlier this year. So that was Journeo. A company I don't think we have talked about before is MadeTech. Ticket is MTEC. The market cap is £50 million. The shares
they put a smile on everyone's face this morning, didn't they?
They appear to have done. Yes, indeed. So this is data-driven insights. This is application, so it uses AI and machine learning. But, sort of machine learning, data-driven insights has been around for a long time, this type of technology. But they've got clients in central government, across healthcare, but also they're working in defence as well and social care. They had a trading update. This was for the 6 months ended the 30th of November. Revenues of £27.7 million versus 21.8 million. So this is a year-on-year increase of 27%, dropping through to profits up by 33% to £2.4 million EBITDA, but very good for them. Just good contract coverage for 26 and into 27. So yeah, all seems pretty positive for them. Back onto defence, we had Chemring Group. They had their full year results as one of our bigger defence companies. Their shares are up by 43% year to date, but they have shown weakness since early November. Now they have published their full year results. Chemring is very well known for air and naval protection against the threat of guided missiles. So Chemring, you've probably seen images of aircraft flying out chaff to act as decoys for incoming missiles. They've got two segments. They've got sensors and information, and then they have their countermeasures and energetics. Now, the sensors and information division saw its revenue fall by 17.5% to £174.8 million out of total revenue of just under £500 million, primarily through delays for UK government order placement. There, so that had an impact on that side of the business. Nonetheless, they've got good long-term order books, and they said the order books grew by 4.8% to £110 million. So they expect to see improvement in the second half there. And let's say the share price has dipped, so maybe an interesting time to look at these. In the countermeasures and energetics, the revenue is up by 16.8% to £323 million. this is a really interesting side of the business. They manufacture here propellants and what we call energetic materials. Obviously, go into weapons, and so they've seen very, very strong demand for high explosives worldwide, including the UK MOD. And they also supply it with the explosives, actuators, and initiators, and this is linked to missile systems. So all seems to be going very, very well there. Good order books, including from the US, order for $106 million for a undisclosed US missile program. There you go. And they've announced earlier, this was 2 years earlier, £200 million investment under the program to grow. So, in all, on balance, if the UK
good.
orders come through, could see things turn for Kimmery. One we have discussed much on this podcast, very high quality business, Halma. Ticker is HLMA, 30 billion market cap. Shares are up by 30% year to date. I mean, it's quite amazing, really. This company's been around for a long, long time. Large market cap, well, for the UK anyway, still up by 30%. UK stocks can do very well. This is it's quite a complicated company. It's a buy and build in the past, very acquisitive. But it's all about instrumentation technologies for monitoring the environment, used in healthcare applications, used for infrastructure, public safety monitoring. But they've announced another acquisition. This is a company called E2S Group. And E2S, I was thinking we could get some of these in the office, Andrew, perhaps. This was founded in 1992, and they manufacture alarms that are used to
wake up analysts when they're having a sleep.
That kind of thing. Yeah. Audible horns, rotating beacons, strobe beacons, used to obviously alert of it on environmental issues and oil and gas infrastructure. So they've got clients like Saudi Aramco, Baker Hughes. So they're acquiring a company, total cash consideration of £230 million. And the company's revenue was forecast at £44 million. So they're paying about, six times revenue for it. So they obviously see value in that company that they're acquiring. But that was Halma. We talked about AI and the future for AI and investment ahead. Polar Capital Technology Trust. It's one of our biggest technology investment funds. The share price, it's 476p, 5.3 billion market cap. They have interims. Big investor into tech. They reported net assets of £6.1 billion up in October. This was at the end of October, up 60%. This was their net asset value from 3.8. Now, this is where timing is everything. Up from 3.8 in the 6 months prior. Now, during the year, of course, over the last 6 months, we had Mr. Trump's announcement on the tariffs. The market got hammered, for the lack of a better term. Technology stocks got hit and obviously have recovered since. So that needs to be borne in mind. Nonetheless, the NAV now is net asset value per share is 540 pence, and the share price was about 476p. But they make some very interesting comments. Well worth reading the Polar Capital Technology Trust comments on the markets. They're very much geared towards infrastructure investment around AI. So they invest in things like, this is semiconductor companies, Broadcom, AMD, and Hynix, Micron and memory chips, Broadcoms and comms chips, AMD processors, all the stuff that's used in data centers, and they're quite exposed to that. They're saying that they do not see, quote, valuations at levels that preclude further expansion, although the high starting point does represent additional risk should the market environment deteriorate. Nonetheless, they don't see bubble levels at this where we are today.
What I find interesting is that they're a technology trust. They've done incredibly well. I remember when they started up, and God, blimey, that was
2002. Well, that was 2000 when I started.
About to say 25 years ago.
Brian Ashford Russell.
And they've done incredibly well. And obviously, built the whole Polar Capital off the back of it, really.
Yeah.
And then you compare it with the IP groups, the Moultons, and you just think, what were those guys have just gone nowhere. In fact, downwards. So the comparison is extraordinary. part of it is obviously they've gone for the big American technology companies that have been
Yes.
amazing.
Yes.
And the others have gone for these little English companies that really haven't quite done it. But I'll tell you what, I'll bet you if you look at it, the cost base for Polar Capital is significantly less than the cost base for IP Group. And that tells you something. Anyway, moving swiftly on.
That was a nearly on that note, Andrew. I think the other news I saw was about Oracle. ORCL is the ticker. A very long time listed technology company in the US. Very well known for its database software originally, and now it's cloud services software. Obviously, it's been benefiting from the growth of AI. Compute infrastructure has a very strong rise in its share price with big deals with OpenAI. However, the analysts have been looking very closely at its capital expenditures, and the whole story there's been this challenge with, are they spending far too much? Will they get the returns on all this capital expenditure that's going on, applying to the big companies exposed to this space? And they have said on a recent quarterly earnings call, I think it was last night, they expect their capex to be $15 billion higher than the $35 billion that it estimated only in September. So that's quite an increase. Impacted shares. Investors were, cautious about when it can get returns on this capex investment that it's putting in.
Very good.
There we go.
And that's it. Good run through. There we go. I don't think I've got anything much more to add to that. I mean, we are now at a stage in the market where liquidity is starting to somewhat dry up. People are starting to close their books for the year end, but you never know. There's always the possibility of a little Santa surprise before the year end.
Yes,
I love a Santa surprise, and I am talking about stock market surprises here.
Yep.
You get a nice bit of good news. You sometimes get a little bit of bad news as well. But hopefully there could still be a few stocks out there with good news. So keep your fingers crossed is what my advice to everybody. We will, I think we'll do a quick podcast probably next week.
Yep.
So we'll still be here. We're still going strong. But enjoy the weekend. I do enjoy it tremendously because my eldest son is actually getting married. So on that note, we'll call it. Do any feedback you got, please do send it over. Thank you.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.